Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, September the 9th. The year's 2021. Let's talk trading. Big trading myth. These videos are for educational purposes only. Your results may differ from mine. Big trading myth. What's the big trading myth? Well, or what is a big trading myth? I think one of the big trading myths is what you do before a trade somehow influences the outcome of the trade. I think another big trading myth is confluence, when this indicator lines up with that indicator, which lines up with some other indicator, which adds up or lines up with even another indicator. You get all these indicators saying the same thing, and that should be a winning trade. I think that's a big trading myth. So I had a trader tell me or comment on the video I did the other day. Let's see, which chart do I want here? I think I want this chart. That they were confused. And this is where I turn the sweet spots indicator in the plot and the lines every 25 pips. And we use the daily range. In fact, I should probably change this to daily on the period. Might make a little more sense. Maybe that's what confused them. So if we take today, what's a simple rule? As you can see, we really only need one indicator, and that's the sweet spot goals, and we really don't even need that. We could just look at the candlesticks. So if it's red at the first line, it would go short, and if it's green at the first line, you go long. So the first line it encounters, it was green. You go long. Well, you can see what happened. Be up over 50. You could have made 75 pips on that trade. Now, somebody might go, Harry hindsight. No, we talked about this earlier, so it's not Harry hindsight. Once again, yesterday, we have the open here, red at the first line encountered to the downside, and there you have approximately a 50 pip trade. And the day before, it's green at the first line encountered, you go long, and that one would have given you 5 pips or so. But the short one, you get 25.50. So I'm not really sure where the confusion is. But then again, since I not that I created this or anything, but something I don't know if I adopted or adapted or what, but it's just kind of obvious to this trader. And somebody would go, well, what if it reverses? Well, what if it reverses? It just might reverse. So what is it that we do to prevent bad things from happening when price reverses and goes opposite to the way we want to trade? Well, we have our stop loss in place. We're not going to risk any more than we're willing to lose on a particular trade. I mean, once again, that's simple. It's all you have to do. So sometimes you win, sometimes you lose. And let's go through the charts here. Monthly, you see we went into the lower wick zone, came out. So green at that line. There's pips to be made. And most of these trades are pretty much just going across a line and taking the trade. We've already seen that the gaps have filled, and we've come 113 pips off that bottom. You see we crossed below the previous week's low, but then it reversed. Now, very interesting, today we started here. We actually touched the monthly open, and then we exited out of the opening range for the month and into the opening range for the week. Actually got above the weekly open, but we pulled back 17 pips since then. Once again, simple trades, green D1 candles at the line. And if you notice, these are all separated. It's not that we're looking at adding on anything. I mean, these are just lines. And we just trade at lines. There's nothing, no confluence, no anything. Just simple trades at the line, showing we're 197 pips over the yearly open. Once again, inside bars, we have the weekly inside bar. The long trigger was 37.80. We're 59 pips above that. Very simple trade. We entered into the daily inside bar that happened 3 days ago. So now we have a long trigger at 67 and a short at 18. Or you could call it 68. I rounded that to the downside. We've got 1, 2, 3, 4, 5, 6, 7 pairs over 100. That's kind of an anomaly in the way the markets have been ranging. But you can see we broke out of yesterday's high, 49 pips above it at the moment. And then, once again, looking at the wicks, you can see here, if you look left, you're into these wick areas. Price left this wick area, and then price is still in this wick area, but it broke through. So that was saying, hey, if you see it starting to break through these levels, perhaps you can get a reversal trade in. And up here, you're in the rat zone. Now we're 4 pips out of it. The buy zone, horizontal lines, except we use the H1 at the line. But if you think about it, the H1 and D1, in this case, will be the same color. So start at the open. If it goes down, H1 would be red. D1 is red. Why? Because it's below the daily open. So just something I thought I should point out. Now, the rat zone, a little bit different trade. We're just looking to see triggers. It's like any trigger you want to use here, you just want to go short in this zone. And in this case, you could have used the highest low, taking that short at 54. You have some nice pips, and that's off of the M15. And down at the bottom, even though it wouldn't have been a rat trade, you could have, technically it is the rat zone, but I like to say the range has to be 60 or more. But it is within 20 pips of the high and low when it's down here, because we only had about 20 pip range. So it's always in the rat zone. And the pivots, you can see what happened at the monthly pivot. Price zoomed up through it, and it actually did a nice move from the monthly pivot all the way up to the weekly pivot. I could say all the way back up to the weekly pivot. And just for the bearish trigger here, you can see near the but according to this, near the pivot bias is long, so you take the green and you make the green. Now, pivots, you trade from the open toward the pivot. We took out today's pivot, And then we took out yesterday's missed pivot. So the only missed pivot this year is from June 17, and that's right here. Wick zone, in and out, in and out. Once again, simple horizontal line trades. And one of the trades that Walmart and I are using is the M1 lowest high, highest low, but we like to use it on the 5-minute chart. So we can see where the action is on the 1 minute, but we want to go with the 5-minute candle color. It's just something that we do. It seems to work out. In fact, Walmart has really been stacking bricks. He's been stacking bricks like crazy for about a month or two now. But when he gets back, he's on vacation this week. When he gets back next week, maybe he can tell a little of the story. But this is very simple. You just use the indicator, the TRO-HL5 indicator to indicate these two areas and to shade it. Now, one thing, I trade the reversals. Sometimes Walmart actually likes to trade the breakouts here too. So he might actually go long if he feels it's warranted. And back to where we started. And I hope I answered that trader's question or cleared up his confusion about this. Let me know if I didn't. And if I didn't, then ask a specific question so I can help you. And as mentioned earlier, price leaving the upper rat zone. And I believe also the upper wick zone. Let's see. Oh, here's the upper wick zone. It already left it. So we're looking at the rat. You can see right here the open plus 100% ATR. I think I should probably put a bracket in there, so ATR 14, just to make it a little more descriptive so you know which ATR is being used. And my dashboard with all the different zones, the ATR zones, and then all the other different methods. Very interesting here. We've got the NZD pairs, New Zealand pairs here, both made lows this hour. The Australian pairs made lows last hour. I've traded the Aussie yen before. Let's just take a quick look here. If it's quick, it looks like it made 57% of the ATR and then reversed. A nice holo trade here. You can see we put in a high, a low, reversed, went green. So that trade would have been worth maybe about 3 pips. But when you stack 3 pips over and over and over again, they add up. Let me put this back to the pound before I forget. So, fellow traders, some of those trading myths. Try not to get fooled by trading myths. Just remember, when you enter a trade, doesn't matter the reason you enter. Once you're in a trade, all bets are on, and you have to see if the market smiles upon you, take profit, or you get stopped out. Remember, when you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks and hit the like button for me, please. I think I'm supposed to say that early in the video, but I keep forgetting. This is the rumpled one, over and out.